Welcome everyone to the Vested Interest channel. This is Shane back for a stock pick of the day, first one of the week. We're going to take a look at one out of the utility sector, American Water. This is actually one that I bought and sold this year. Bought it earlier in the year, ran up by about 25%, sold it for another opportunity, and I do really like the stock. So let's take a look at it again. All right, this is the vested interest stock trainer. This is the criteria that we will be going through. This is the initial screener I use to look at thousands of, well, not thousands of companies, but maybe that many by now. Out of the thousands of companies, I use this screener to kind of whittle it down to see which ones I'm interested in doing a deep dive into the financials, looking at their balance sheet, their income statement. So it's got to make it through this first before I even attempt a deep dive into the financials and figuring out a value for the company. So let's see if this one makes 5 of 8. If it was a company out of the financial sector, we would add in price to book. But since this is American Water Works, which is a utility company, we will not look at this one. So it must meet 5 of 8 to make it onto my watch list. All right, check them out on their homepage, www.amwater.com. That's www.amwater.com. American Water's Contract Services Group offers regulated like operation and maintenance services in the United States. These services include the delivery of design, build, operate projects, and the provision of water, wastewater operations, maintenance, and management services. And that's really what they provide: water, wastewater operations, the maintenance, the management, the building out of those operations, right? If you're in one of these states, they may be providing your water. California, Washington, Utah, you can read the rest of them over here to the right. Here's the map, here's the states. And if you were to go to their homepage, you'd be able to click on each one of these and get more detail about that state. Now, we are talking about American Water Works. They are a utility company out of the utility sector, ticker AWK. And the reason we are talking about them today, down 2.34% on the day. Big drop, down to $139.63 as of the close of business on Monday. 52-week range as low as $118.74, as high as $155.50. Now, I was buying this back in the 120s. It ran up into the mid 140s. That's where we sold it. It didn't quite make it to the 155s, but it does look like at least it's on another pullback. So maybe we can get it closer to this 118.74. But right now at 139.63, they're not within 15% of a 52-week low. They need to drop under 136.55. So just not quite there yet. They do have a market cap of $27.242 billion, a beta of 0.70. Price to earnings PE ratio seems a little high for a utility company, $25.16 per share. Earnings per share at $5.55 per share. Earnings date coming up here towards the end of the month, October 29th. Forward dividend, $3.31. Dividend yield currently at 2.32%. Ex-dividend date, August 12th, so we are past that. They paid out on September 3rd. Ex-dividend, we looked at that. One-year target estimate, at least according to Yahoo Finance, where I pulled this page from, $140.44. So not much higher than where it currently sits. Jumping over to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. To do that, you look at their 5-year dividend yield average, 1.84%, $1.84, 1.84%. We compare that to their current 2.32 over here, 2.32, same number. Since it is higher than their 5-year average of 1.84%, that speaks to potential undervaluation, at least according to dividend yield theory. Now, payout ratio for a utility company is very good. Usually they're very high, 70s, 80s, even 90%. This one's at 56.26. I like anything under 75%, so this fits the bill for me. Growing free cash flow, we're just going to say it right off the bat. They do not have growing free cash flow. It's all over the place, negative $432 million, negative $1.3 billion, negative $860 million. Companies like this they're very capital intensive. They have a lot of costs to keep the operations running, to rebuild water lines that may need to be removed and replaced. So there is a lot of maintenance for companies like this. It doesn't look like they're repurchasing shares either. Now, jumping over to stockanalysis.com, this is another source I go to for information. I will point out that their last update here for this information was August 14th. So we're in October, so it's almost a month old now, right? So I do want to point that out. And I do recommend 2, if not 3 sources, stockanalysis.com, Yahoo Finance was the previous page. Those are 2 that I go to. You pick any ones you want. Just don't blindly follow just one. Make sure 2, if not 3. So if you see something that's off or outdated, you can check another source and make sure the information you're looking at is accurate. That's the idea there. Now, stockanalysis.com, they have 8 analysts that have taken a look at this. They see a low of $128. That would represent a 8.08% decrease from where it currently sits. Average estimate of $145.13, pretty close to what we saw with Yahoo Finance on the previous page. That would be a potential 4.22% increase from where it currently sits. High estimate of 160 would represent a potential 14.90% increase. Now, I'd like to look at some statistics as part of my initial screener. One is return on capital employed. I like above 10%. They're not quite there at 6.09. EPS growth, earnings per share growth, I like above 5%. They are there at 6.90. So quarterly payer, as we mentioned, payout ratio, again, under 75%. They have it a little higher at 57.39%, but still well below that 75% or lower that I'm looking for. Very nice dividend growth, not quite double digits, but 8.15%. Growth of 11 years. Buyback yield, when they are pulling shares out of the market and buying them back, they are doing it effectively. They are pulling more shares out of the market than they issue, which is also another surprise for a utility company. Usually that's the other way around. They issue more shares than they buy back, so that's nice to see. Shareholder yield positive at 2.63%. This company pays out like most companies do, March, June, September, December timeframe. Going back to February 2023, they were paying 65 cents, raised it up May 2023 up to 70 cents and some fractions of a penny. Raised it up again May 2024 to 76 cents and some fractions of a penny. And the most recent raise was in May 2025, 82 cents and some fractions of a penny. So nice, consistent dividend raises over time. Again, nice 8.15% dividend growth over time. And that's really what you're getting from a company like this. You're not going to get a ton of price appreciation from a utility company, but you are going to get nice, steady, growing dividends, right? All right, let's run them through the screener. This is going to be a quick video, which I don't mind at all. Understand the business. Yes, they're a water utility company. They are building out the facilities, maintaining the facilities, managing the facilities once they are built out. Wastewater, water treatment plants. Growing free cash flow? No, they're a bit up and down. Growing dividend? Yes, 8% growth. Dividend payout ratio is under 75%. It's under 60%, so check there. Dividend yield theory says they're potentially undervalued right now, so check there. It is not quite within 15% of a 52-week low, needs to drop under that 136.55. Return on capital employed, not quite to 10%, no check there. Earnings per share growth is above 5%. We're looking at 1, 2, 3, 4, 5. Does just make it onto my watch list like it did before. This one I will probably do another deep dive into. I do like the company. If it was to drop back into the 120s, it might be one I add back into the portfolio. Let me know what you think American Water Works. Is it one in your portfolio? Are you adding on the dip? Or maybe you're part of the sell-off. Maybe you are getting rid of this and buying other opportunities. Would love to hear from you in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Don't forget to share with anyone you think that might find value in the content. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. So I'm only sharing my opinion, investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.